Hello everyone, this is Mulhan from Mulhan Trading. In today's video, I'm gonna go over how to catch the high or the low of the day. Sometimes, I'm not gonna say every single time. It's gonna give you an indication if this is the high of the day. And I'm gonna go over some tricks and tips on how to have a bias for every single day. So every single day when the daily candle starts, you'll have a bias. You'll have a level that you can't go long when it's above, you only go short, and the same thing below this level you can only go long, no shorts. It's gonna make your life easier every single day. You're always going long and short in the right direction. If you guys like this type of content, then make sure you hit the like button, and you also make sure you subscribe to the channel for any new content. Before getting into the video, if you want to take your trading to the next level, then you need to backtest your strategy and make sure it's profitable over time, as well as testing and backtesting other strategies to see which one fits you the best. I personally use Trader Edge, which is one of the most efficient tools available in the market. You can backtest your strategy 3 times faster than traditional spreadsheets, and it's gonna show you all the statistics of the strategy immediately. Make sure you use the link in the description to get access to the platform. So first we should start with the daily profile, how the daily candle form, what's the daily candle formation, how does it start and how does it end, how does it open and how does it close. Most of the time we have two scenarios. The first one is we have the open price here. Let's say the order flow is bearish. Most of the time what's going to happen is at the open, price will go up. It's a wrong movement just to take some liquidity, and then price will come down in the right direction, and it's gonna, let's say, creates a low here and then it will close here. In another scenario, what's gonna happen if the order flow is bullish? What's gonna happen is price will open here and it's gonna go down to take some liquidity. That's the wrong movement, and price will keep going up and will create a high, and then it will close here. So now, in order to catch the high or the low of the day, you would need to catch those Judah swing, either this one or this one here. Let's focus on this scenario here. In this scenario here, you would see that price went above this level here, this open price above, and if you could find a trading setup here, you would be catching the high of the day. What is this level here? This is your midnight open. This is your midnight open. So most of the time, you would want to go short when price is above the midnight open. In this scenario here, you would be catching the high of the day. Same thing here. This is your midnight open. The wrong movement would be to the downside. If you catch a trade here, you most likely would be catching the low of the day. Now, midnight open is the start of the daily candle. So the daily candle will start here, and this is what happened. Most of the time, this is your manipulation here, either above the midnight open. It's always this case. When you have open price, what's going to happen is you want to go short above the open price and go long below the open price. If it goes this way, then you would go short here and price will come down into the direction. That's the usual case. Now, in this case, what we have on this daily candle is this is the open of the candle, high of the candle, low of the candle, close of the candle. Similar here, open of the candle, low of the candle, high and close. Focusing on this scenario, which is open, high, low, and close, if I want to represent this on a daily candle, it would be like this. You would have a wick above and a wick below. Now, what happened inside this candle, you see a regular candle here with a wick and then a body. But what you see inside is price open here. This is the open of the candle. This is the open of the candle. Price goes above to give you this Judah swing here. If you enter here, so basically, if you're entering here on the daily candle, you'll be entering somewhere in here on the wick. So at this level, this is where you enter and then you catch all this trade. You see, it's the same thing here. So inside this daily candle, what you see is this open, open, and then high, it's here. Price come down. This is the body, and this is the close. So that's what you see in the daily candle. So in order to catch the high or the low of the day, you would need to focus on the order flow and the midnight open. What's going to happen after the midnight open? If price goes up, you would enter here and then go down. So basically, this is my midnight open. I'm only going long below this level and going short above this level. So if there is, so let's say price was giving me this type of trade here. So a breakout structure, and then I have fair value gap here. Most of the time, this will not work. It will not be respected. What's gonna happen is this. This is you see every time, right? Change of character here. This fair value gap here, if there was one. Now this is a short setup. This you can enter. But this long setup, even if it was valid, it was a breakout structure, and then you have a valid fair value gap, this would not work. What will work is this change of character into a fair value gap short setup. This one would work. Similarly here, you can go short even if there were two, let's say, relative equal highs, and then a sweep with a change of character, and then you see a fair value gap. This will not be valid short position. You need to find a long position. So most of the time there will be, for example, a fair value gap here. Price will come to the fair value gap and goes all the way above. So basically this is your daily bias. Every day you'll have a new bias based on this midnight open. This is a very, very important level, and you would see that price sometimes struggle. This is a pivot. You would see that price will be respecting this level a lot of time, same as support and resistance. Now coming back to this diagram here, let's say there was no setup available here, and this was your midnight. So you would want price to go above the midnight again and find another setup. If it doesn't, and then 830, let's assume 830 is somewhere in here. This is your 830 open. If price goes above 830, you can find a setup here and price will come down. This is also possible. So if you miss the midnight, no worries, wait for the 830. There is another Judah swing here. You can catch it. Basically, what I'm trying to say here is you have two levels, a midnight and 830. Let's say this. This is your midnight open, and this is your 830. Okay, let's say price is above the midnight open and above the 830. Price is on extreme premium. So it's not only premium when it's above the midnight itself, price is in premium, so we'd want to go short. But if it's above both those levels here, you would want to look for short for sure. It's above 830 and above midnight. If price is only above 830, that's also a possible. If you find a setup here, you can go short. If price was coming below the midnight, then that's a discount. But if it's below midnight and 830, that's extreme discount. So this is a very high probability setup. If you find it here, a long setup, most likely it will go and maybe react from the midnight open. So those two levels are very crucial, and you should have a look at them. If you're trading London, you should focus more on the midnight open. If you're trading New York, then you can focus on 830, but have this midnight open level always on your chart. Now, in order to mark the midnight open and 830, you can do this. So basically, you would need to go to the 1 minute. Next, I'll give you an indicator that plots everything automatically for you. So this is only for your knowledge. You don't need to do this every day. You can use an indicator that's gonna plot all of this automatically. Okay. So what you need to do is you need to find midnight on New York time. So basically, 0000, which is around here. I'll zoom in. Make sure you're on the 1 minute. So it's here. If I zoom in more, it's at this candle. Now, where is the open of this candle? This is the open of the candle. I'll bring my line here and I would mark this. So this is my midnight open. Now, if I go to the 15 minutes, now you will see how this price is respecting this level a lot. You see how it can go above and it started to go down. And what you can do is have this as your bias. So whenever price is below this level, you go long. When the price is above this level, you go short based on your trading setup. If you don't have a trading setup, make sure you watch my other videos, as especially my previous video where I give a full trading plan, putting all together step by step with a checklist. Make sure you watch that video. Now basically, you can do the same thing for 8:30. What you can do is you can go to 8:30 and mark the 1 minute candle that opens on the 8:30. But to make this easy, what you can do is go to the indicator, look for this indicator, ICT New York Midnight Open and 8:30 Open by Alpha ICT Trader. Those are my settings for the indicator, basically 000, and then those are the defaults. I think I just changed the color. That's it. It's gonna plot the 8:30 for you and the midnight. Now there are two tips that you need to focus on or keep in mind. The first one is make sure you follow your order flow. So imagine price was going this way to the downside, and now I have midnight open here. Let's say my midnight open here, this level. I'm not gonna go long just because price went below this level. I would want it to go above this level, and I will look for short with respect with the order flow. You see? So I would wait for price to go either above or below midnight with respect to the order flow. The second tip is to wait for kill zones. So midnight starts at 000 EST, New York time. Now you would want to take your trades on the London kill zone, which is 2 to 5. I really prefer this, but it's all on you. You can enter immediately after the midnight open, but I really prefer to cool down and go for my trade from 2 to 5. Now taking a look at this example, it's clearly the order flow is going up. So what I would be looking at is my midnight open. I'd like to see price open and come down. I'd look for a trade opportunity in here, and I would like to see it going up, maybe creating a low of the day. But I would be good with a trade of 3 to 1 after this. I don't need it to be exactly the low of the day. I'm only trying to catch some good trades. I'm not trying to hold this for all my life. So I'd be good with 3 to 1 after this trade. This is USD CAD. The daily candle starts here. I went to the 1 minute and I draw my midnight open. This is my level here. So I will only enter my trade at 2. This is 2 a.m. This is the London kill zone open. Now if I go and play this, you would see that if I switch to the 5 minutes, I would see this price open here, and then I see move to the downside. So that's what I'm looking for, right? Price going down, taking some liquidity from here, change of characters around here. I'll switch to the 1 minute. You can use any time frame here. I'll be using the 1 minute today. What I can see here is liquidity taken here, those equal loads here taken. Now price needs to go above this point for a change of character, and price fill this fair value gap here and started to go up. There was a potential buy from this level here after creating this inducement here. You see how inducement created, price goes up without breaking structure, price come down. So you could go long here, but this is kind of risky. Now the London kill zone, and it is before London kill zone. I mean, it is at London kill zone, but I'll wait for a change of character above this level. And with this closure above, price is above midnight, but I'm gonna enter from this kind of breaker block here with this fair value gap. As I always say in my videos, overlapping PD arrays are the strongest. Even though I have a fair value gap here, there is a potential price will come down to fill this fair value gap, but the high probability setup is to come into this breaker block with a fair value gap. So I would go long at the 50% or just at the body of the breaker block and almost below 50% of fair value gap. I'll cover this fair value gap because there is still a potential. There is nothing guaranteed in this trading industry, So I would be having my stop loss below this level, and I would target, let's say, those relative equal highs. So here, or those relative equal highs too. So this is 1.85. This is not good. I'll go all the way here or somewhere in here. This is 3 to 1. So that's what I'm looking for, right? 3 to 1. Now let's see how this plays out. So now we are in the trade, and price react from the breaker, and in almost 1 minute, or I don't know, 2 minutes, 3 minutes, and we are out of the trade. 3 to 1, if you're risking 1%, that's 3% gain in your trade. And if I go to the 5 minutes, for example, you would see that you almost caught the low of the day. You see right here, you almost caught the low of the day. The day starts here, price came below open price, and you caught a trade there, price keeps going up. Obviously, this doesn't happen every day. Sometimes it's more complicated than this, and I'll show you some examples. So now going over another example, I would use another setup, which is the setup that I explained in the previous video. So basically, bullish order flow. I'll zoom in, and I would look at my midnight open, which is right here. I marked my midnight open. Basically, since my order flow is bullish, I'd like to see price go below the midnight open and go up, find the setup here, and most likely I would be able to catch the low of the day. Now, into the 3 minutes, I'd mark 2 a.m., which is the London Open kill zones. Right here, this is the London kill zone. So price goes up. Now, if you are not aware of the order flow, if you catch a trade, maybe it's gonna go well with you. If you catch a trade somewhere in here and price is gonna go down because you're on the premium zone. But in order to catch that high or low of the day, you really want to go with the order flow, right? So price keep going up. Now what you can see is kill zone started, price is below the midnight open, and there was a sweep here. And also from my last video, what we can see here, this is, I'll take 3 minutes as my higher time frame. What we can see here is this unfilled fair value gap with some liquidity above, and price come inside this fair value gap without closing below. You see only wicks. If I switch to the 1 minute, I would see that price reacted from here clearly and then lift only one fair value gap. So what you can do from here is, if you want to take a risky entry, so you can enter from here, which is also the midnight open. You see price into midnight open and in this fair value gap here. And what's gonna happen after is this. You see how if you targeted this level of liquidity, you'll be almost catching the low of the day, right? You see how price reacted from here just because we are below the midnight open. You catch a trade here, you almost scored the low of the day and then taking this liquidity. Now, just to show how price respect those levels, especially the midnight, you see how the day starts by going down and then go up. You could have gotten a trade here and you would catch all this movement, and then price goes up again. Another time, rejection from the midnight. Another time, and now it's happening now. There is a rejection from the midnight. So you see how this level is very crucial and important. And the same here, the previous day. You see how it started by going below, then price only wicked above this level and started to go down this whole movement, and it's the same here, and slightly went above the midnight open again and then started to go down, and then just before the day ends, price touched the midnight and went down again, and then another day starts. I'm just showing you how strong this level is. Now if I come here, you would see that I'm just going over some random days, right? You would see that price opens here, a wick below, a trade, a wick, and then this whole movement here, all the way down here, and then another time here, and price went down where into the 830 level. You see the wicks below the 830 level, and price started to go up into the midnight open, and price started to go down. And you see how price respect this 830 level. So you can consider this as a supply demand zones, support resistance, a pivot point, basically a level that you need to pay attention to in the future. Okay, now it's the same thing here. See how price went above the midnight. You could have catch a trade here. Now price into the midnight again, and price keeps going down. Another time here, price keeps going down. Then 830 open here. Price never went below the 830, but only started to go up. Very clear daily profile that I explained at the beginning of the video, right? Midnight open here, price come down, and then go up all the way. If you can clearly see this, open, go down, and go up, and then close here. So I really wanted to make it simple, and you really need to practice this yourself, as you will get better going over it by yourself than me going over some more examples. Basically, what you need to do is mark those levels using the indicator that I gave you. Whenever your setup is, let's say you want to go long, you would want your setup to happen in kill zones and below the midnight open. Let's say this is the midnight open. Let me cross this. Let's say this is the midnight open. You really want to see your setup happening here, and you enter here for potential low of the day, right? You do this. Make sure you wait until the kill zone starts, because a lot of times there are some fake outs and fake change of character before the kill zone starts. You really want to avoid that. So wait until kill zone starts. Make sure you're in the right direction. Take a look at the overall order flow, and then take a trade in that direction. Make sure. That's it for today's video. Stay tuned for the next videos. Make sure you guys like, subscribe to the channel, and share this video to your friends. And make sure you join my free Discord. We have about 2,700 people over there. We share a lot of stuff every day, and we have a free weekly analysis. I'll see you in the next video.